There's a lot of rumor also on LinkedIn, for example, or in the news. Yes, we don't want these interconnectors no more because of the higher prices, which is in some way maybe a fallacy that in this market conditions, indeed, they are the exporters, but things can change very rapidly within a few years. What is your standpoint as the CREG, and how do you tackle this time horizon issue that now it is not in the local interest of these countries, but maybe in a few years when things turn around, they would be very happy with it?
You might consider this as a political topic. You can also approach it from a purely economic perspective. And there, the answer is quite clear. If you increase market coupling, if you increase market integration, that's not a zero-sum game. You are increasing welfare for the entire coupled region. And indeed, this might be perceived in exporting countries as something negative because they are increasing their prices. This is something that is linked to very specific market dynamics, and you already indicated it might be the case today, it might not be the case in a couple of months or in a couple of years. The best possible example, notwithstanding the Nordics, is in the core region. Within the energy crisis, middle of 2022, we had France massively importing electricity. Now they are massively exporting, with only 2 years difference. They have switched from heavily relying on their neighbors during the crisis because they had low availability.
Good morning. Welcome all, and welcome to Time2Talk, Time2Market's podcast, where we interview experts from the energy industry. And today we have here Nico Schoutteet from the CREG. Hi, Nico. Welcome.
Hello, good morning, Paul. Thanks for having me. I'm glad to be on your podcast.
We're very happy to have you. Nico, could you give a short introduction? Who you are, who is the CREG, and what do you do?
I am a Belgian national, Flemish, so I live in Flanders. Yet I work in Brussels for CREG, one of the 4 regulatory authorities in Belgium, alongside with VREG, COPI, and Brugel for the different regions. So that's one of the particularities in Belgium. We have several regulators, each in charge of regulating very specific aspects of the energy sector. But so I work for CREG, the Federal Regulatory Authority. It's what we commonly know as the NRA, or the National Regulatory Authority. And we are competent for the supervision of several aspects related to the production, the transmission, and the wholesale side of electricity, gas, and since recently also the hydrogen markets. And so at the CREG, we actually have a twofold mission. So on the one hand, we try to supervise, we try to enable the proper functioning of energy markets in order to ensure that these work in the interest of society and energy policy and the consumers. But on the other hand, we also have a very specific, yet a very important mandate to protect and to inform and to empower consumers. And we at the CREG try to achieve this by performing several tasks. So those tasks involve advising governments, public authorities. We monitor markets, we decide on and then subsequently enforce our decisions on market rules. We try to inform and we try to empower the public in the context of very complex energy markets. Maybe finally, what's important to mention, one of the main principles of our functioning at the CREG is our independence. So we are an independent regulator, we are independent from governments, we are independent from other stakeholders, and we have no commercial interest. So we actually only account to the Belgian public through the federal parliament. And maybe before going into my specific role at the CREG, I just want to briefly describe the CREG setup because that's a relevant context for my role. So we have at the CREG, we have a board of directors consisting of 4 different directors, each in charge of a specific department. We have the presidency of the CREG, where our president and his advisors represent the CREG to the outside public, to the Belgian stakeholders and within Europe. Now we have a general affairs department as well, dealing with legal aspects, logistics, HR, finance. Thirdly, we have a prices and accounts control directorate in charge of transmission tariffs or regulating certain aspects of retail prices. And then finally and fourthly, we have my department, so the technical operation of electricity and gas markets. That's where the different wholesale markets are covered. And so I work as an economic advisor in this department on electricity and gas markets. on some very specific, but also some rather generic topics. And all of these topics are linked in one way or another to the functioning of wholesale electricity markets. So I work on market coupling, market integration, from the very long term to the day ahead and the intraday markets. But I also work on European and regional engagement. I work on outreach to other NRAs, to Acer, to the European Commission, other institutions. And then finally, I am also responsible for market monitoring. So analysis of data, visualization of data, drafting of reports on mostly, again, electricity markets. So that's a bit my role within the CREG.
Thank you for that introduction. Very clear. Let's start with the first topic, and this is one that is just mostly in my interest. I find it fascinating. Knowing, of course, how complex these energy markets are, specifically when you look at the day-ahead market, the intraday market, market coupling, 𝐓𝐚𝐴, the clearing algorithm, flow-based market coupling, all extremely complex, mathematical, hard to grasp. And then one of your main roles is to protect the consumer, who basically has close to zero understanding of all these complexities. How do you manage personally, or as CREG, as an entity, to cover such complex topics and still be able to protect the consumers? How do you bridge that gap?
The first step towards fulfilling that role efficiently, I guess, would be building of knowledge. So we have many different experts, each on with their specific specialities, their specific topics of expertise within the CREG, working for many years on specific market coupling mechanisms. You mentioned flow-based market coupling as an example. We have a lot of expertise built up over the past years and even over the past decades, because we have been active for quite a while on these topics. So that's the first step. We have to, in order to overcome this information asymmetry issue between TSO and regulator, and then in the next step with consumers as well, we have to understand ourselves how all of this works. And that's a big challenge because, as you mentioned, it's very complex, very detailed, a lot of information all coming together. Then obviously we try to present that as simple as possible, not only to consumers but also to other stakeholders. Companies within the energy sector also benefit from the knowledge that we share with them. And we do that by analyzing the available data, by engaging with our system operators, engaging with the power exchanges, engaging with market participants themselves. And all of this information we try to bring together. We try to present that to all the stakeholders in order to increase the transparency and increase the understanding. And obviously, there's the specific aspect of protecting consumers. Obviously, that's something that we always have in mind when discussing the market rules and the setup and the design of electricity markets. We have to ensure that these markets not only function as on themselves, but they also function in the interest of society and the consumer. And it's something that we always consider when trying to answer questions: should we design the mechanism in one way or another? One of the main guiding principles that we always try to adhere to as much as possible is through different criteria, definitely. But that always involves, in the first step, trying to understand and be able to explain properly how these markets function. Indeed.
And you mentioned as well that you're a lot in touch with other regulators within Europe that fall under Acer. And we know, of course, that the day-ahead market, for example, is a very coupled market where there's the welfare optimization. And your role is to protect consumers, where it's, of course, in the consumer's interest not to have too high prices. But how can you protect the Belgian consumers of having not at too high prices, while you also need to look at the larger European picture, it being a coupled market? And how do you battle that protection of your local consumers towards other consumers in Europe and the dialogue with other regulators?
Well, that's a question that goes a bit outside of my main expertise, because I mostly work on wholesale markets, and when we discuss how to protect consumers, that's very often considered as a step outside of or further down the value chain of the energy sector. Obviously, we've been through a very impactful crisis over the last couple of years, which started in the wholesale gas markets, propagated to the electricity markets, and had a very big impact on consumers. So most of the things that we have done as a regulator individually, but also with other regulators over the past couple of years in cooperation with ACER and with the European Commission and policymakers, is try to shield consumers from the most detrimental impacts of this crisis on the wholesale market. But the wholesale markets themselves, the ones which I'm working mostly on, have not changed very significantly. And one of our roles as regulators is explain that there are also other aspects to wholesale markets which are very important. And the fact that even though it might appear as if, for example, allowing a market outcome such as exporting electricity from one country to another tends to increase prices in the exporting bidding zone while lowering prices in the importing bidding zone. Those kinds of things, they are very often perceived in a negative manner. It's something that we've seen very recently as well. After the go live of the Nordic flow-based market coupling, a lot of complaints from certain market participants, certain stakeholders within certain bidding zones that this leads to increased prices. Yes, this can happen in very specific bidding zones, but what we try to achieve in the wholesale markets is a global optimization of welfare. We try to maximize socio-economic welfare, including consumer and producer surplus on a regional or a European level. And inevitably, this can lead to higher prices in one zone and lower prices in another zone. But globally, when considering the entire picture, what we aim for is the maximization of welfare and the cheapest possible dispatch, given all the constraint in terms of generation capacity and in terms of transmission capacity. This is also something which ACER has clearly demonstrated in their market monitoring reports. All the efforts that we put into market coupling, market integration are towards the benefit of consumers, because even though there are these kinds of winners and losers of market coupling, globally speaking, we are reducing prices. And then in a second step, after the wholesale markets, obviously we have all kinds of mechanisms on retail markets or in between the different markets to try to shield consumers, especially vulnerable consumers, from the volatility in wholesale electricity markets. And definitely that's an important topic.
Thank you for clarifying that, because that was going to be my next question. Isn't it more about balancing both the buyers and the sellers? But that's also what you basically say here, that that is a big part of your role as well. Maybe slightly of a political topic, but as you mentioned, flow-based market coupling in the Nordics, large exporters now get higher prices. They are not too happy with increased interconnector capacity. And there's a lot of rumor also on LinkedIn, for example, or in the news. Yes, we don't want these interconnectors no more because of the higher prices, which is in some way maybe a fallacy, that in this market conditions, indeed, they are the exporters, but things can change very rapidly within a few years. What is your standpoint as the CREG, and how do you tackle this time horizon issue, that now it is not in the local interest of these countries, but maybe in a few years when things turn around, they would be very happy with it?
You might consider this as a political topic. You can also approach it from a purely economic perspective. And there, the answer is quite clear. If you increase market coupling, if you increase market integration, that's not a zero-sum game. You are increasing welfare for the entire coupled region. And indeed, this might be perceived in exporting countries as something negative because they are increasing their prices. This is something that is linked to very specific market dynamics. And you already indicated it might be the case today. It might not be the case in a couple of months or in a couple of years. The best possible example, notwithstanding the Nordics, is in the core region. Within the energy crisis, middle of 2022, we had France massively importing electricity. Now they are massively exporting. With only 2 years difference, they have switched from heavily relying on their neighbors during the crisis because they had low availability of nuclear and very high demands, towards a new situation which started end of 2023, but mainly been observed in 2024, where nuclear started to pick up again, demands decreased, and renewable production increased. So France became very big net exporter of electricity. And so these kinds of shifts, these kinds of market dynamics are only possible in coupled and integrated markets. If we would consider the European electricity sector as just a patchwork of national markets without interconnectors between them, that would be bad for everyone, not only the importing countries, but also the exporting countries. I don't want to spoil too much, but I know that Acer is working on a lot of analysis in the framework of their upcoming market monitoring report, where they will demonstrate this issue quite clearly, where they will demonstrate and quantify even the benefits of market coupling, comparing it to situations where there's no interconnection capacity available between the different zones. The results in terms of increased welfare due to market coupling and integration are quite spectacular.
It's great to hear that the numbers back up the assumptions, basically, and I think the whole market is curious to see how the report will look like. One of the other topics here, Belgium being interconnected, of course, and you having the aim for reaching optimal markets, fairness, equal prices for everyone. We, of course, have NEMO as the interconnector, which is currently explicit, which, of course, market participants love from a speculator perspective, trying to chase the arbitrage, make money on the price difference. But of course, this is relatively inefficient from welfare optimization point of view. Does CREG have a standpoint, or do you maybe have a personal standpoint on how this should change and if it should change going forward to have the UK back again in the market coupling to basically achieve higher welfare within Europe?
That's an interesting question. I have engaged a lot with other regulators, with other stakeholders on this topic over the past couple of years. I remember the discussions which took place between all the regulators, also with the regulator from Great Britain, Ofgem, and the European Commission and Acer just before the Brexit. Our position was always we have to try to find a solution to keep the benefits of implicit market coupling in place even after the Brexit. This obviously did not happen because of the political context, but again, only looking at it from an economic perspective, it's quite clear that the results that we see today, despite the rather performance mechanisms which are in place, so the explicit mechanisms in the long-term day-ahead and intraday markets for exchanges between Belgium and Great Britain, despite that, we see that there is still a welfare loss. We quantify that every year in our monitoring report. So every year we publish a monitoring report on electricity markets at the CREG. The next one will be out towards the end of April. But there we have a section that most of it deals with implicit market coupling because that's the bulk of our activities, that's most of our work. But one specific aspect relates to how efficient is the explicit mechanism in place on NEMO across the different timeframes. And there we can clearly quantify that the results are worse from a welfare maximization perspective. And we see that while in the implicit mechanism, which was in place before the Brexit, those are always in the right direction because they were optimized by 𝐜𝐴. This has changed. I don't know the numbers by heart, but I think last year it should have been something around 20% of the hours where the flows went against the price differential. So that's clearly, it's not the same as non-intuitive flows because it's not the result. It's not welfare maximizing as in flow-based market coupling, but it's counter price flow or an adverse flow, however you want to call it. It's decreasing welfare. It's going from high price zones to low price zones, and in 1/5 of or 20% of the hours, that's quite significant. And so from an economic and technical perspective, our position is quite clear. We should try as much as possible to find a way to have the benefits from implicit market coupling, which was previously in place, and apply that to the NEMO interconnector. We understand that politically this is not possible. The position of the European Commission and Acer is quite clear on this, but there have been some initiatives, some open letters from different stakeholders, among them Elia and NEMO themselves, asking us to revise that position or to allow for more flexibility and possibly integrating parts of that interconnect in some of the cooperation mechanisms of the single day ahead and the single intraday coupling. And from a technical and economic perspective, I would personally support that. That's quite a no-brainer, even though I understand all the political controversy regarding an increased cooperation with Great Britain.
But that is a very clear standpoint. Thank you for that, Nico. You mentioned as well that Elia was one of the parties who supported this. Can you emphasize a bit more, how is your relation with Elia? You being the NRA, Elia being the TSO, what are the topics that you typically discuss, or what action points are taken between the two of you?
The relations between myself, my colleagues, and most of the people at Elia are quite good. So we typically have quite aligned views when talking about market coupling or market integration. And we share the same objectives. And I know that's different for many of my colleagues working on different topics who are more often in conflictual mode with their counterparts at TSO side. And that's because in general, the relation between a regulator and the TSO is complicated. We have the fact that we have different stakeholders, different accountability, and that can make it quite difficult to determine what's good for society, for consumers, or for Elia, or for other interests, commercial interest, non-commercial interest, and so on. And when we discuss topics, whatever the topic, it's always difficult to determine these different priorities, and this often leads to conflictual discussions. But these are high-level reflections, though, and between experts, actually, on a working level, we can have very diverging views on how to achieve something. But from experience, what we actually want to achieve is very similar, at least when discussing market coupling, market integration. So, and that is, we try to achieve this market coupling in a competitive, efficient, and non-discriminatory manner. And we tried to successfully complete the internal energy market, and that's one of the key triggers to support the energy transition, and that's an objective that we at the CREG share with the people at Elia, definitely.
How is the relation when you look at an exchange level? Because let's say a Nord Pool and an EPEX, they both cover the Belgian market. Do you also have dialogues with them on similar topics, or is it not really a relation that you strongly have?
Working in market coupling and market integration also involves working with power exchanges. I am most often in contact with the people at Elia, but I am also quite engaged in discussions with the three power exchanges which have the right to perform trading services in Belgium. So that's EPEX, Spot, and Nord Pool. But also 𝐜𝐴ZPA, the Dutch intraday power exchange. They are not yet active, but they have the right to provide trading services through their passport from ACM, the Dutch regulator. So we have discussions with them. We have a similar relation with them as with Elia. We are a regulator, they are regulated entities. Sometimes the discussions are a bit more complex because there's more than one of them in Belgium, and that can lead to conflict. We only have one Elia, we have three power exchanges. That's a big difference. And the fact that there are several power exchanges, or NEMOs as we call them, nominated electricity market operators, is an additional layer of complexity. It has led, and it will continue to lead in the future to discussions on the appropriateness of competitive entities such as the NEMOs performing together a very monopolistic function, which is the MCO function, or the market coupling and operator function. There's kind of a discrepancy between NEMOs competing with each other, but also cooperating in the interest of society. That's a complex discussion, and it will again be one of the main points of the 𝐜𝐴Z𝐭𝐻 2.0 discussion. So that's the revision of the guidelines on capacity allocation and congestion management, which is a legal initiative taken by the European Commission to revise the rules for market coupling and market integration in the day ahead and the intraday markets. It's something that is on the agenda for this and for next year.
We have seen with 𝐜𝐴ZPA, they are very interesting exchange, of course, in the Dutch market, where they offer the exposed state to imbalance settlement between counterparties. And that brings us basically to the topic as well, imbalances. We see that Tenet is relatively flexible with having imbalances. It is less flexible in Elia if you don't have any asset, if you come from the speculative angle. What is your thought on that? Or does CREG have a standpoint on the, let's say, imbalance regulations within Elia? And are there any plans to be more open, have a more liberalized market? Because there are clear signals that having more speculators in the market might even improve the efficiency of the market.
I understand that point of view, definitely. I'm not an expert on balancing markets, but as some sort of a high level reflection, maybe, I understand that there's the appearance that Elia seems to have this quite strict approach towards passive imbalances, but legally, a balanced responsible party has indeed to strive to be balanced, or to help restore the balance of the entire system. But that's through the financial responsibility for the imbalances that it creates. And from our point of view, from the CREG's point of view, we consider that this imbalance price should be a sufficient incentive to achieve this. And now we're not necessarily convinced that we need additional contractual obligations in this context between the BRP and Elia. That's one thing. Even though we don't have this very strict approach or strict position towards passive imbalances after the day ahead and the intraday markets, we do not really support passive imbalances in real time. So what I understand is being called reactive balancing. This is a bit outside of the organized balancing energy markets, and as I understand it from the experts in my team, it leads to, or it can lead to, inefficiencies, need for development of additional products to increase the effectiveness of balancing energy markets. Because by participating in these markets, I mean, obviously in theory, you contribute to a more efficient price formation, better price discovery, better dispatch, or more efficient dispatch, which reduces the risks and the associated costs for all the BRPs, for the TSO, and that's a bit that explains a bit the difference position that we have towards passive imbalances. On the one hand, after day ahead and intraday, and on the other hand, in real closer to real time, when we speak about reactive balancing.
One of the topics that keeps the market excited or maybe worried for some parties is, of course, the change in granularity on the exchanges, that we go towards the day at 15-minute blocks for the day at auction. Is that also a topic that lays close to you, where you have a standpoint, or where you know that there's a lot of discussion has been going on back and forth between CREG, exchanges, TSOs?
Obviously, we follow the developments and we eagerly await the go live, which today is foreseen, I think, in June of this year, if I'm not mistaken. I don't know the exact go live date by heart, but it's something that has been anticipated for quite a long time. And again, I mean, I'm an economist. I will look at it from an economic perspective. Again, this again seems like a bit of a no-brainer. We can clearly describe the theoretical benefits of aligning the market time units in day ahead to those of the intraday market, with a smaller granularity, moving from hourly products to quarter hourly products. So we definitely support that. We have some analysis which are today still internal, but will be included in our upcoming monitoring reports related to this very specific question of the discrepancy between 60-minute products and 50-minute products, because we see today fact that a lot of market participants have to cover their position with hourly products in the day ahead markets. This does not align with their production profile. For example, solar producers, they have this upwards ramp in the morning, and then this downwards ramp in the evening, or starting from the afternoon towards the evening. And if you cover that with 1 hourly products in the morning, typically you will have sold too much in the first 2 quarters of each hour and too little in the third and fourth quarter. And this has to be compensated, because I mean you have to strive to be balanced after the intraday market, and we see that in the intraday auctions, which went live last year just before the summer. There's a very big difference in supply and demand liquidity when considering these first 2 quarters of each hour, and the second, the third, and the fourth in the morning, and then the reversed position in the afternoon. And these kinds of things, how to say, this does not really reflect the difference in supply and demand. It just reflects the discrepancy between 60-minute products and 50-minute products. So it's not really that efficient. We anticipate that this will disappear with the go live of the 15-minute products in day ahead. So that's a good thing for the efficient functioning of markets in general, and something that will allow especially renewable producers to more accurately and more efficiently already trade their positions in the day ahead markets.
Did I hear it right that you basically believe that the intraday auction that was launched last June, I believe, or before summer, is only partially successful, but you expect the success to be larger when it matches the 15-minute time frame on the day ahead market?
That's one interpretation, or you could interpret it as saying that it's actually quite successful because it allows to solve this discrepancy. The intraday market has been in 15 minutes products even before the go live of the intraday auction. So also the continuous market was in 15 minutes products before, at least for Belgium. So the fact that there are now intraday auctions to solve this, in addition to the continuous market, is actually a good thing. But it should not be necessary, because it's actually as simple as just selling 15 minutes product in the day ahead markets. And now I'm simplifying, obviously, because implementing a new market time unit in a well-established market such as a single day ahead coupling is not a trivial task, and it also explains why it has taken so long to implement. But conceptually and theoretically, there should not be any difference between the two.
And do you think that with the introduction of the 15-minute day ahead auction, the interest for the intraday auctions will be strongly reduced by market participants?
As far as I know, but this is to be confirmed by further analysis, these kinds of adjustments to solve these discrepancies are only done in the first intraday auction. So it's the IDA one, which takes place in the afternoon of the day before delivery, just after the day ahead market. This is also where the largest volumes are today. But we do expect that with this alignment, there will still be a need for intraday, or there will still be an interest for intraday auctions as we have more and more renewable energy into the system. We have more and more a need for these producers to balance their positions because of the changes in the forecast. And if you sell everything in the day ahead market and your forecast changes, then you have to fix that somehow. And that's where these intraday continues as well, but also the intraday auctions have quite a positive benefit to the functioning of markets in general, but also to the individual ability of market participants to trade more efficiently.
Yeah, so the 15-minute blocks on the day ahead auction will partially solve the issue of the temporal imbalances that occur within a 1 hour block, let's say when the sun rises in your example, but the change of renewable forecast will still require the intraday auctions to be present, and you expect market participants to be there in good volume as well.
Yes, definitely. And it's something that we already observe today. We see that, when we take the time series of the volumes that are traded in the intraday markets, mostly continues then because we're talking about the past, but we see that the relative weight of the intraday market increases. We went from being a very marginal market in 2015 with a couple of hundreds of gigawatt hours traded per year towards a market where 7 or 8 terawatt hours is traded on a yearly basis last year. So moving from less than a fraction of a percentage of the total consumption traded on intraday to almost 10%. This will only increase in the future. So we will have more traded volume. And this is not necessarily something that is being taken away from the day ahead market. It's not because the intraday market has higher traded volumes that the day ahead traded market has lower volumes. They can both grow, and we see that with the energy transition knocking on our doors, we see that there is more and more need for efficient, non-discriminatory markets to allow for market participants to be able to sell and buy their energy in day ahead, in intraday, and in subsequent balancing markets.
And do you think that the high amount of market penetration by new market participants, specifically from the speculative angle, let's say the hedge funds that are still entering these markets, that will improve market efficiency?
That's a difficult question. I don't have any concrete experience with those market participants, let's call them, and the CREG typically does not engage a lot with them because we typically have our mandates towards consumers. But I think from a theoretic perspective, even speculative traders, they contribute to more efficient arbitrage across different markets between different time frames. So in that sense, it's they can contribute to more efficient and better functioning markets, definitely.
Then one of the last questions which I always like to ask to the guest, you being the regulator in Belgium, what do you think that the biggest challenge is for the Belgian power market in the next years?
That's a difficult one for which I was not prepared as a disclaimer. But challenges, I'll look at it from a personal perspective, because I cannot imagine that I know all of the topics on which the CREG is active sufficiently to give a proper answer. But from a personal perspective, I would say that one of the big, if not the biggest challenges which I work on is selling the idea that these energy markets, if it's long-term markets, day-ahead markets, intraday markets, balancing markets, are actually the key towards the energy transition. We very often have misinformation, negative perceptions about the role of energy markets. It's especially something which started to appear a lot after the crisis of 2022. People had very negative perceptions of how markets function, and mainly because of the impact that there was on consumers. But we actually need them because they are the most efficient way to successfully integrate all of, on the one hand, the renewable energy sources that we need, but also the flexibility that is required to have an efficient energy transition. The reason why these markets are so important for that is because they inherently they try to achieve these goals in the most cost-efficient way as possible. That's part of, for example, looking at the day-ahead market coupling. That's the objective function of the 𝐜𝐴 algorithm. In other markets, there are other mechanisms in place to assure that we have the most efficient market outcomes. And that's quite important in the context of the energy transition, because we know, looking at all the investments that we need in generation capacity, but also in transmission capacity to support the energy transition, we know that this will be very expensive, and we know that as a society we can only bear as much. So we need to think quite hard on how to pursue this energy transition at the lowest possible cost, because it will have to happen. It's not a question, do we support the energy transition or not? The question is, how do we support the energy transition in a way that is at the least possible cost with the best possible outcome? And for that, organized electricity markets are there one of the key elements. That's a message that we have to get towards more stakeholders and towards more consumers, I think.
I think that was one fantastic answer, Nico. Thank you very much for such a detailed answer. And I think we will conclude today's podcast. I would like to thank you very much. It was an incredibly interesting discussion. And the audience is, I suppose, also welcome to reach out to you if they have any questions. We really enjoyed it having you as a guest. So thank you very much for today, Nico. And to the audience, thank you very much for listening. We hope you enjoyed today's podcast, and we see you next time on Time to Talk.